guys, Quantum League Capital back with another motherfucking video, and we haven't made a video in a while. A lot of things happen. Been pretty busy, but I just want to go over some things. I haven't made a video in a while. We got funded 400k with definitive funding, so little update there. I had made a video actually a few weeks back. I just never uploaded it, so maybe we'll upload that soon. I'm not really sure yet, but let's get into what I want to talk about. So I kind of want to talk about just I talked about it a little bit not that long ago, but I want to go back into delving into like strategies, so because it's something that's really important, and there is multiple ways to trade. It all depends on your style, but I've gone through many different phases, many different approaches, many different teachers, and you can succeed with anything, especially if you have the data to back it up. So enough trades over time, eventually, if your data and your statistics are showing that you are making money, then by all means keep trading however you want to trade with whatever strategy. But this is just my opinion and what I've seen over time through all these different phases and approaches that I've taken, and what I think works best. So we can definitely use this as an example, but since I was looking at this, let me just try to find something that I haven't really looked at. We'll start here. So this is the prime market terminal. If you go to my Instagram, which I think my Instagram label is on here, but it's kind of, you can't see it because it's blacked out right now, but we'll look at that in a second. Okay, so we'll look at GBP AUD, right? We'll start here. GBP AUD. Haven't looked at this pair in quite a while. So let me just start where I would start. I'll get rid of some of these other ones. So the first thing I want to look at when I'm looking at a pair, and this is just, again, this is an approach that you don't even need the prime market terminal for this. Let me just take off that little handle right there, but you don't even need the prime market terminal for this. Just some type of system that will give you some type of seasonality and something that can show you COT data. There's plenty of things out there. I just like using this because it's more professional. It's pretty accurate in my opinion as well. So yeah, so anyway, in my opinion, one of the most important things is COT, because it's going to show you where institutions and people who are actually have a lot of money, where they're putting their trades. So just to explain that a bit, as you can see up here, it says leveraged funds. It's showing the big institutions and where their positions lie, and COT can kind of be confusing. So you go to net percentage for that week, and it'll show for this specific currency, USD leverage funds, we are net positive 4%, which means there are more longs on USD than there are shorts. So very, very important. It helps you get in line with what's happening. So for this specific pair, let's just get rid of these two currencies, NZD and USD. Let's just get rid of both of them. So let's go to COT. let's go to GBP, and then we would click on the setting, leverage funds, go back, new widget, go to COT again. Since we're looking at GBP AUD, we want to compare both of the currencies, so we're going to pull out AUD's data as well. So we put this over here, and now we have them side by side. So this is as of July 9th, so a few days ago this report came out, and we can see that GBP for multiple weeks now has been trending pretty positive. So we're net longing GBP by 24%. Now AUD July 9th, we can see that it's been mostly negative. It went a little bit positive and then it turned back to slightly negative. So we may be changing just a little bit, but that's okay. For this little exercise, we're gonna look at this. So it went positive around May 28th is what it's showing, because it went negative a little bit. It went negative a little bit, and then we went positive May 28th. So let's just mark that out. May 28th. So it was already kind of positive. And then when did this... Oh, shit. Jesus Christ. When did this go from positive to negative? So see, AUD's been negative for a while, so it switched right there. So AUD actually went negative as far back as March 12th. So let's mark that out actually. Now see, the thing is just because it's showing that this is negative, it doesn't necessarily mean that AUD is going to be weaker than GBP. If we look back on the COT for March, it might have been positive, it might not have been. So March 12th is right there. So this was in fact positive. But this is just one component. So I can't really see back at the time what the seasonality was for GBP AUD at that time, unfortunately. So yeah, we can't really see that. And also, so that's one component. The second component, now that I've just talked about it, is seasonality. As we can see, the seasonality is telling us it's trending upwards. So with the COT data being positive for GBP, the seasonality also being positive, the forecast table showing pretty high probabilities of it going much higher. That's good for us if we were to trade this and go long. The third piece is looking at the DXM, and the DXM is essentially the retail index. It's showing the positions of the retail traders. And as we can see down here, it says 76.9% of all traders lose money with this provider. So where they're getting this data from, it's showing that most of the people that trade with this provider are losing money. So the idea behind this is we want to trade against the retail because they suck ass. So we have the institutional positions, which are usually making money, and they have a lot of money to move the markets. We have the retail, which sucks ass and are losing money because they don't know what they're doing. And then we have the seasonality, which is data basically that is predicting what will happen in the future based off of past data. So like basically it's taking a bunch of data from like July all the way to September, and all this data from the past, it's predicting what will happen based off of that data. So that's kind of what seasonality is. So if we were just to look at this, that's the fundamental aspects, right? That's the fundamental aspect. So we can look at this. and that just gives us our bias on how we're going to trade. So we see that and we're like, okay, I'm going to be long on this pair. My bias is long because GBP is positive on COT, AUD is negative. The DXM shows that retail is shorting, so we don't want to short, we want to go long. And that data's probably been that way for like a little bit now. So now we can start looking at the technicals, and this is the only time you should start looking at the technical analysis, is after you've done the fundamental analysis and seen what is the data showing you, because otherwise it's not impossible to just solely trade off technical analysis. People do it and it's definitely possible, but it's almost like kind of guessing, in my opinion. You're kind of trading at a disadvantage because you're missing so much data that could really help you out and stop you from taking like stupid trades. Because like you look at this and you're like, oh, I want to go short right here, not knowing that everyone in retail is going short, and then you just lose your ass. So it's trading blind almost, or like shooting from the hip. Like, yeah, you can do it, but why not just take a sniper rifle and fucking be accurate? Anyway, that's just how I see it. And like I said, I've taken many approaches over time, and this just feels way better. You feel more secure in your position, and if you lose your position, you're getting more high probability trades anyway, so if you take a loss, you're not really concerned about it, because you're like, okay, well, I'll just go on to the next one. And the thing is that these type of fundamentals help you kind of predict news too. So anyway, let's get back to the technical aspect, which is something that people, especially in retail, is like, I guess, the holy grail almost. It's all different types of technical analysis. And there's a lot of things with technical analysis that can refine your entries and get you these really good entries. So let's start talking about it. So the thing that I like to use now, that is the most simple way to trade, that doesn't overcomplicate it, that doesn't make it super it just doesn't make things confusing. It's just using simple supply and demand and looking at reactions from a higher time frame. So I like the weekly and daily, especially the weekly. If you can find like a weekly demand or supply zone, they're very powerful. And the way that recently I've been doing it and looking at it is, you can tell when big institutions are getting involved, because what will happen is you'll see these big moves from these areas where they try to push away really fast, and a move like this, where in 1 week we get a move like that for like 300 pips, that's not a retail move. That's showing that there's institutions that are very interested in this area and they're pushing up and buying from it. So what happens more often than not is these areas, they come back down to get in and buy again at a better price, and then repeat the process and continue to go higher. So let's look at the daily real quick, because I want to look at something. Yeah, so that was from the weekly perspective, and we're looking at longs just because based off of the bias. This is this week, but literally you could have entered in on this trade in the past 2 weeks, and now it's starting to take off. There's a little gap in here, so maybe we return to that area just to fill it in. I'm not really sure yet. But if we do, that could be a good trade. Could be a good trade. It looks like it already got filled in on the daily though, so I don't know if it'll actually come back down here. Maybe it will come test this. But either way, as you can see, like I said, from where we have this big reaction, and I'm sure the seasonality was already lining up because this was back in May, so this wasn't that long ago. And that's when this move had happened. And I know for a fact, if it was only 2 weeks ago, then the seasonality was definitely showing bullishness, because the seasonality, it doesn't just change dramatically overnight. It's something that's like a very gradual process. So this had to have been positive, like when it came and returned to this area, which I wish I would have seen, because that would have been a good trade. That would have been a banger. But okay, so that's one example of a demand zone, right? Another one that I pointed out and that I marked up was right here. So again, when we look at this, we can see from this, and this is a weekly chart, and the reason I mark out the weeklies is because they're so powerful. When you see a big move from the weekly, like when you see this and you see a giant candle like that and then it just goes on a big run, if it returns right here, more than likely it's gonna freaking take off. So this was in December. This was actually Christmas Day. Merry Christmas. And we can refine these zones. So whenever we look right here, like we can look at more specific areas. So we could narrow down to right here, for instance, right? Because this is more specific. From here, it really took off. Right here, this is still okay, but it's just you're gonna have a bigger stop loss. But let's just say we took it from right here, right? We put our stop below here. So it's 154 pip stop loss, right? But because we're trading from a weekly demand zone, that's going to call for a very big push. So minimum, we're going to take it at least right here, right? But the second position I would be looking at is right here. So let's just see. So from there to there, it's a 2.5. From here to here, it's a 1 to 4. And if you held it all the way up here, it's a 1 to 5, 1 to 6 almost. And that takes about, let's just say you entered right here, 1, 2, 3, 4, 5, 6, 7, 8. So about 2 months. And you are swing trading it, but you don't have to really pay attention to it. You don't have to worry about it. And a lot of times what happens is when you get into these zones, if you come to the daily, there becomes another opportunity to enter. So like say that this rises, it comes back down, I would trade it right there. I put my stop loss below here. Now you have a 90 pip stop and you have 2 positions running. And if you held it all the way up here, that's a 1 to 6. But if you held it all the way up here for 2 months, that's a 1 to 9.3 and a 5.5. So you're making like 14-15% off of one trade. And that's just if you stay patient. If you stay patient and you follow the data and you follow what these big institutions are doing, people want to talk about smart money and what they're doing, but they don't want to look at the data that is publicly available where you can see where they're positioning their trades. And you don't want to look at data where it's seasonally, it's literally trying to show you what is most likely to happen based off of past data. That's what most people talk about price action. Price action is literally trying to predict future movements based off of past data, and you don't want to use seasonality where it's like an AI that compiles all that and does a lot of the work for you, giving you high probabilities and percentages. And you don't want to look at retail data that is showing majority of the people who lose, and you don't want to take the opposite position of their trade just like the smart money does. I'm just saying. I'm just saying. And then you can actually use that to time the market and get these good positions and be able to ride them for longer and not have to like look at your screen 24/7 like most people do and like I used to do. You can actually go about your day and do what you want and not have to stress and just let your trades do their thing. And if you lose your trade, it's not a big deal because you know you're going to get another high probability setup coming along. So these were long positions that I showed. Maybe the next video I'll show some short positions. I mean, one of them is right here, but that's assuming everything lined up data-wise for this to go short. I don't really have that data available right now, so it's hard to say, but anyway, I just want to break that down for you guys one more time. Is you really, really, really want to start with fundamentals, and fundamentals doesn't necessarily mean like news. So that's one aspect of it, and keeping track of the news and knowing when high impact news is coming out is super important. But a lot of times these fundamentals, showing the positions of traders, showing the position of retail, and showing the position of the seasonality, is going to help you get in line for whatever the news is going to do. Because these institutions, the reason they're positioning the way that they're positioning is because they more than likely have a good thesis of what's going to happen on the news. So this helps you position that, and that way you don't have to like try to predict what the news is going to do, because that's super difficult. Just let the institutions do it for you. They're positioning the way they're positioning because of what they believe is going to happen on news days and how the trends are going to go. But yeah, technicals to time the market, but fundamentals comes first. Gotta have the data to back up your bias. And that's something that I learned the hard way. And like I said, there's a lot more saucy things you can do with technical analysis. There's some things that I've learned, but I've talked about them in past videos. I may bring it out again pretty soon, just to show you guys, but I think this is the most important thing right now. So I just wanted to break that down, strategy talk, and the people that do watch, I haven't made a video in so long, but if you do watch, giving you something that you can take with you and maybe try to get past that like newbie stage, because I was stuck in it for quite a while. Anyway, follow me on IG, Baldwin_QLC. And if you want a discount to the Prime Market Terminal, that's in my bio. Just make sure you click apply on the code before you check out. And I know this was a long video, but I really appreciate it, guys. Thank you for watching. I'll see you next time. Peace.